For more, let's bring Propagate content chairman and co-CEO Ben Silverman, and on the phone, Jessica Lessin, editor-in-chief of The Information. Ben and Jessica, good to have you both. Ben, that's the big headline, that they're going to be cash flow break-even 2021. With all the content spending they've been doing and all the hits that they keep churning out. Actually, I think the biggest headline might be Netflix will have exciting news about Bridgerton later this week. But what does it tell you that the economics here are changing?
Well, I'm glad you segued to the culture and the content, because that's where I live and can comment on. And I'm watching them continue to have the freshest content in all of streaming. They were the most prepared for the acceleration that the pandemic brought on to streaming, and they are literally doubling down. They're launching a movie a week, that they announced, and they have so much good original content. And the way it works globally, Arsène Lupin, a French-originated show shot in French with a French movie star at its helm, based on super old French IP, is the 5th most watched show in America right now, according to their own metrics. So it's really amazing the way that ecosystem is working globally.
Jessica, more than 200 million subscribers. You heard what Julia said, where the latest growth is coming from outside the U.S. How do you think about the runway ahead for Netflix now that those price increases are sticking and the company's in a better profitability position?
It's a very strong position, and the company had signaled that subscriber growth might slow a little bit, and clearly, we're not seeing that, and I think that's something investors are cheering, along with the free cash flow that you mentioned. The pandemic has caused them to curb some of that quite wild spending, and while it will continue, I think there are signs of belt tightening here that seem to be paying off as well.
Ben, what is the next frontier for Netflix? Do you think they should or ever will get into live content, whether that's news or sports or other type of set-piece shows, and then try and get into some more advertising revenue? Or have they proven the model that they've got works just fine?
Well, clearly there's so much added competition, and everyone is going to be spending on original content. And I know that my father activated his HBO Max subscription upon seeing the movies they were going to release. So there's more and more firepower entering this realm. But I really think this is not a zero-sum game, and all of these streamers are starting to benefit and grow as they deliver really good original content. As it relates to Netflix, we're launching an interactive show, our second one we've done with Bear Grylls in the middle of February that they just announced. And I really think interactivity has a lot more to go, and Netflix right now is the leader in that. It's more experimentation, but there's a lot to do there and a lot you can unlock with engagement in interactivity. And then clearly their investment globally, but also in lower cost programming. It's not that they're doing less programming, it's that they're diversifying their programming mix. For every $10 million an hour crown, or however much that might be, $20 million an hour, they're also doing $300,000 to $500,000 reality shows as well, which I think is great in terms of them diversifying the mix and appealing to everyone. And at some point, all these advertisers need to express themselves next to content and culture, and the doors are going to open, I believe, across most of these streamers to advertising money.
Ben, I'm curious what it's like from your position, from someone who's a content creator or showrunner. When you look at the landscape now, there's so many options on streaming. Which is the dream partner? Who do you go to first? Who's paying the most money? Who has the most open mind? What's the landscape like out there for those conversations?
We still are heavily invested in broadcast and cable television. It's still an environment that we can participate further downstream off the network airings, off the cable airings in revenue. So we continue to invest, and we believe there's a lot of great opportunity to gather large audiences in those platforms. But as it relates to the streamers in general, we are making shows for all of them and are looking as they expand internationally. We're starting to do Spanish language programming for multiple platforms now who we have great relationships with because of our Spanish language programming expertise. And I think it's still trying to find the personalities. I'm not quite clear yet on what the personalities of all these platforms are and whether they want to just become television as it existed and recreate it within their own streaming service and appeal to everyone? Or do they want to start to have more of a personality and a kind of profile as it relates to the content they have? And so far, Disney Plus feels like the only one who's established that.
Shepard Smith here. Thanks for watching CNBC on YouTube.